the 1446th edition of Short-Term Trading Live with Oscar Carboni. Good evening, traders. This video coming to you on a Tuesday night for Trading Wednesday, Fed Day number 2. That is March 16th, 2016. As we know, with today's volatility, futures trading is extremely risky, can cause substantial financial train wrecks in your lives. You really need to know this business, and you need to know that a stop is and can absolutely be your best friend in this business, because when the volatility goes like this and you freeze and start to crap in your pants, your stop will get you out. It is your best friend. Put it in. Let it do its job when these markets go against you. Traders, what do we have? All right, so this is called Short-Term Trading Live with Oscar because we tend to be out of any trade that we're in before the market closes at the end of each day. Unless we have a massive profit built in, we might ride it overnight. Generally, it is short-term trading for the one-day trade, and we get in at some point during the day and we're out before the close. We're not scalpers. This video, however, slightly different. This video, we go to number 2 right off the bat. Never discount or forget the larger picture, traders, and we must recognize there is a larger picture here. In fact, there's really 2 larger pictures. We'll get to that in a moment. Tomorrow is FOMC day number 2. Auntie Janet, my little aunt, is going to come out and either raise rates or not raise rates. They won't be lowering rates. If I were in her seat, I would absolutely unequivocally raise rates, because it doesn't matter that the rest of the world doesn't need us to do that right now. We have had some whiffs of inflation in our numbers. Now, not fantastic, but whiffs. A whiff of inflation today is out of control inflation in 5 years if you don't do something about it now. I have been watching since I'm 18 years old. I've been watching this thing 35 years. I am telling you now, if the Fed doesn't do something about what they think might be inflation today, what will happen in 5 years would be mega inflation, hyperinflation. That's why the Fed raises and lowers rates in most cases. Yes, we had QE the last 9 years, but prior to that and moving forward, the Fed is going to move rates if they think they have to because of something in the future. That's slightly longer term trading. And that's what I want to talk to you about in this video. The law of averages is all we have, traders. And this is what I mean. I have shown you countless formations in the last 9 years of these videos. We've got 1,446 of these videos on YouTube. There's probably 3,000 more I have in my library that I've filmed. Many people have seen them, but not all of them had gone public on YouTube. What I am here to tell you is this. The formations I have shown you, this is a fine art. It is not a science. There are no calculations that are exact or formulas that will tell you if a formation will work and how often that formation works. That is the law of averages. If you find a decent formation and it works 8 out of 10 times, you must use it 10 times in order to get those 8 to come your way. If it doesn't work one time, you don't stop using it if it's a valid formation, because that's how you get the law of averages to go into your hands. You understand how that works? Let's say you're a flag believer. Every time you see a bull flag, you buy that bull flag when it breaks out. That will work for you way more often than not, but you have to do it every time you see it. You've got to believe in your analysis. And if you take a formation that you see works steadily, and if you use it every single time you see it, you will bring the average into your flavor or favor, if you will, for that one formation. So let's say that worked for flags, and it works for head and shoulders, and it works for a triple bottom or a triple top or whatever it is that you like to use. If you find you've got a formation that works, you have got to be consistent. You've got to believe in your formation. You've got to trade it every time you see it, so you get the 8 out of 10 times it should come your way. With that in mind, I'm about to show you a formation that is longer term. I have been hemming and hawing about this since October of 2015, when I removed Do Not Fall in Love with the Downside off my board and said maybe, just maybe, you might find yourselves falling in love with this. We rallied up a little higher and had a major crack. Since that major crack, we've had a bit of a rally, and I have been showing a formation that I know is a very rock-solid formation that you must keep in mind. You cannot discount. And I'm going to show you that formation again right now, and here is why. Because there is no way I will ever have the law of averages in my favor, as well as you've seen me have it with this Omni, if I didn't stick to these formations, no matter what the comments are, no matter what other people say they think is going to happen. I read the charts. I listen to what they say. I repeat that back to you. With that in mind, come on down to livewithoscar.com. Hang out with me in my live trading room and allow me to show you how to read these charts. With no further ado, let me show you what the hell I'm talking about here. Okay, traders, let's take a look at this. This is what I'm trying to talk about. This is something that one of the techniques I use for long term. This is my Omni Trading Academy's proprietary moving average, or as I like to dub it, OTAPMA. And imagine during the video someone calls in. Well, we're not going to answer that this time because I see that person's not involved in the markets. So let's get back to this chart. Traders, here is what I want to show you. Long term, my OTAPMA average, generally you do not get below this average unless something not good is coming our way next. And what I mean by that is this. We were well above the average in 2007. By 2009, we had crashed through the average, come all the way down here through OTAPMA. Bang, you don't see it on the chart. Then we rallied above OTAPMA after that and never looked back. Look at what I'm talking about. 2009 gets above OTAPMA, gets back to it at 2010, spends a little time under it in 2011, taps it again in 2012, and never looks back. Long term, we go out to 2015. Not only does it get under OTAPMA, it cannot seem to get back above it. And where are we right now? The next chart is this exact same chart. And on this chart, what I'm going to show you is something very interesting. This is the exact same chart blown up, and this is what's happening on that chart right now. And all that talk about formations was about this. This is a weekly chart. This has taken months to develop. This is what I like to call a head and shoulders formation. Left shoulder, head, right shoulder. Generally, but not every time, but a good 8 out of 10 times, this formation leads to a drop. Now, we are back to testing this OTAPMA right here. Remember, we're never under it. We get under it, and suddenly it starts to have trouble and builds a bearish formation. Now it's taking a gasp of air and testing my OTAPMA average. I am telling you now, until we get above this and take off, I have to believe in this. I have to, and I've got to show it to you. Now, because it's a weekly, it doesn't mean it happens tomorrow. And it may never happen at all. But I gotta keep my eye on the larger picture. Never discount or take your eye off the larger picture. Right now, for weeks and weeks on end, we've had something that doesn't generally happen, a bearish formation below my OTAPMA. Do you understand why I've been showing this to you week after week? A lot of you are writing to me as if I don't know what I'm talking about or I don't know what I'm looking at. But I kid you not, this is a very valid formation. This is a very interesting average. And right here you are having, they're coming together. Right now, they're converging. What does it mean? Well, if they raise rates, I'm thinking it takes off. But I don't know. I do know this. This average and this formation generally setting up like this tells you that something is coming long term. So I am not here to tell you it has to go down, but I am here to tell you if you are a good analyst, you keep your eye on the larger picture and you do not discount it ever, no matter what the critics write to you. Let's continue. This is your Dow Jones Industrial Average. You're going to get a better picture of what I'm looking at now. Once again, 2009, we get below OTAPMA for the first time in many years. We finally get back above it, and we stay above except for one little whiff underneath in 2011, and we just stay above and stay above and stay above, and then this mess starts to happen. You get under it, you get above it, you come back down, create a head and shoulders, and what I like to call is this Oscarism called a head test. That's what we're seeing now. If we fail to get above the middle to the top of this head, this market is going south. I am telling you that's how this works. Now, does this have to work? No, it's worked many times in a row. Does it have to work every time? It does not, but that doesn't mean you shouldn't keep your eye on it. Now, there is an even larger picture here. This one. And when you look at this picture, it is not bearish. But this part of it is, and this is the part we're at right now. We're not here, we're not here, and we're not back in 2009. We are here. That is a bearish formation. It can absolutely go up. That is my point. I don't know that the formation will work, but this is the larger picture right now, and that is me telling you, be careful, because this thing could teeter-totter up here. It's got to get away from this formation. Now, I'm going to take this Dow Jones chart and blow it up for you, the exact same chart, and this is what I'm telling you about. You've got a left shoulder ahead, a right shoulder, below OTAPMA. This is what I call a head test, and we can't even seem to get above OTAPMA yet. Maybe tomorrow the Fed will get us there. But unless and until we get above this head, I will continue to show this to you. Will continue to talk about this. I will continue to believe it is going to turn down. That doesn't mean we haven't been buying dips when Omni says to buy. That's the larger picture here. Keep in mind, larger picture. NASDAQ, it gets uglier when you look at the NASDAQ. Look at the size of it on the NASDAQ. That's your NASDAQ cash market. So, here's that monstrous head and shoulders once again. And when you look at this, a head test never even took place yet. You're inside the shoulder very easily. Big, big formation. Now let's slam something over. Let's overlay this chart with OTAPMA. Look at where we are. It failed here. It got above here, of course, got back down here and failed. And now it's coming up here to test it again. And if it cannot get above here, the formation will pan out. So I am telling you, you don't have to be short for this. Be neutral. Keep your eye on the larger picture. What's said after the Fed meeting tomorrow might make all of this make sense. We'll find out. Then you've got this. Right now, and I think there is a decoupling between crude and the stock market, but right now, top day, how goes crude? How goes the market? Look where crude is. Crude is at the average once again, just like the S&P. Crude has just fallen out of this little bullish channel. It sits right here as I write to you as we speak. Then you've got this red channel. So keep this in mind. You hit OTAPMA, you dump. You hit OTAPMA, you dump. You hit OTAPMA, we dump. We're at OTAPMA. Now, you hit OTAPMA, you're just about or at the red line. Just about or at the red line once again. And look where we are now. Just about or at the red line, which is the top end of this big channel. At your bottom end. This goes back for months and months on end. So I am here to say, yes, we can vacate the area very easily. But the larger picture here doesn't say we should. And we seem to fail each time we get to my OTAPMA. So until we get above OTAPMA, you've got to believe it's going to fail again. That's putting the law of averages in your hands. Failed here. So if it gets here, sell it. That worked. If it gets here, sell it. That worked. If it gets here, sell it. It should work. You understand the law of averages? Maybe it won't, but if you want to be good at this game, you've got to pay attention. That is my gift to you this evening, traders. Keep the larger picture in mind at all times. So traders, that's what the hell I was talking about. So maybe you're getting the picture. This is not for short-term trading, this video. This is to remind you to never forget or never discount the larger picture, and always know this. This is a fine art, not a science. Not every formation works 100% of the time, but the only way you will get the law of averages into your favor and help you trade is if you believe in your formations. You've got to believe in your analysis. That's my gift to you, traders. I will see you all at livewithoscar.com. Remember, keep your emotions out of trading. One of the best things you can do to help yourselves with that, and tomorrow, let me tell you this right now, the emotions are going to be about as grand as the volatility. Tomorrow afternoon, volatility through the roof. I will tell you this much. 45 minutes. Do not touch anything for 45 minutes after Aunt Yellen speaks. Generally, what will happen is you'll go like this for 45 minutes, and then it'll choose a direction. 45 minutes is not guaranteed. Give it at least that much time before you get yourselves involved. And you know what that is. Stops are in. Emotions are out. Happy FOMC day. I'll see you all Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.